Good evening. Good evening. Welcome to Money Matters. I'm Charlie Shields, Wells Fargo Advisors, LLC, member SIPC. My co-host is Patricia Dunn, Merrill Lynch, also a member of SIPC. Patricia, how you doing?
Good to see you again.
Good to see you. Our special guest, I've had Jim Hanna on many times before. He's a CPA and a CVA, Certified Valuation Analyst, knows how to evaluate companies. Stick with us. It's going to be an interesting show. Well, let's get right into it, Pat. Let's talk about the toughest issue in people's minds right now. What do you do about fixed income? How do you help people get invested in a scary fixed income market?
Very good question, because we've got the Fed threatening to raise rates. The question is when. Is it going to happen in June? Is it going to happen in the fall? I'm advising my clients to stick with dividend-paying stocks.
Okay.
I think that's the safest venue to be in right now, particularly also at this point in the business cycle.
How do the older clients react? I mean, they've been trained, 100 minus their age is how much they should have in the stock market, and of course that doesn't work anymore. Are they reluctant as they move into their 70s and that sort of thing to want to be heavily into stocks?
It is something that we have to deal with all the time. But I think at the same time they realize if they just look at the local bank and what the certificates of deposit are going for,
Sure.
And then we talk about what treasuries are going for, the 5-year, the 10-year, the 20-year, and they go, please, what else is there? What else can I do? And that's when you start to educate, and that's when they start to convert. I
find the same thing. If you have an intelligent discussion, clients can figure out you're giving them the right advice, and they'll step in and do that. And that's been well received by a lot of clients now over the last 5 or 6 years, because it's gotten them back out of the hole that some of them were in back in 2008, right?
That's absolutely correct. It's the equity that's pulled them out of the hole.
Yeah. Okay. Well, let's talk about we've had a lot of fun for the last few years. Our economy has been slowly rising out of the ashes, but now it's a little tougher to discern what's going to happen in the future, right? So how does the U.S. economy look to you?
I think the U.S. economy is still going strong. It's still building. But the U.S. stock market has had 5 years now in a row.
Yeah.
I do feel that we're in for more volatile times.
Yeah.
They really started in the fourth quarter of 2014. 2015 is not going to disappoint in the area of volatility, and I think your smarter investor will pick their timing, that when the market is way off, that's when you go in and buy.
Yeah.
I think what the surprise is going to be is not so much the American market as I think the European market, because in Europe, their counterpart to our Fed is lowering interest rates.
Sure.
So they really are where we were in 2009. So,
and they're starting to take the same steps we took to come out of the trouble, right?
Exactly. And they say the same for Japan.
Yeah.
But I have my doubts there, because interest rates are so low in Japan right now, we're practically to negative numbers.
Well, the interesting thing is we started stimulating our economy to get it going, and we drove long-term interest rates down to make that happen. But in Europe, they already have very low interest rates, and they're pumping money in. So it's kind of an experiment over there that hasn't been tried yet.
Exactly.
Yeah.
Exactly. And you reach a point where, can you go any lower?
Mm-hmm. Okay, so, and then there's the issue in Europe of the northern European countries that have let's say, a stronger work ethic, and there's the question with the euro and the Greeks. Are the Germans going to work until they're 80 to make sure that the Greeks can retire when they're 60? Or is there going to be a problem with that? And I have no idea how that's going to shake out over there, but I'm watching it with interest.
I am too, because your point is very well made. The good news is that the Greek economy is very, very small compared to the rest of Western Europe. Okay. So, and Greeks even talking about getting off of the euro. Yeah. And if so, then it's really more of their problem.
And we have to be, well, the world has to be careful they don't make exceptions for Greece, and then Portugal and Ireland and Italy and Spain will say, hey, well, we want some more of that good deal also. Mm-hmm. So I think they probably have to be tough and let Greece out of the European Union if they're not going to knuckle under and decide they're going to start working a little harder.
Exactly.
Okay. Well, as far as Asia is concerned, you've already touched on Japan. They've been stimulating their economy for quite a while. Their market is bouncing off the bottom a little bit, but how about the rest of Asia? Do you feel like China is going to be an anchor around Asia for a while? I know their growth rate has slowed. What's your outlook?
I would, if I had to buy Asia, I'd put my money on Japan over China. Mm-hmm. But I still think the growth is in Europe, not so much in Asia.
Good. Well, let's talk around the world, the smaller economies, the emerging markets. Is it too early to be starting to put money there?
I would be careful.
Okay.
A client of mine expressed, and I thought it was beautifully put, emerging markets have failed to emerge. Uh-huh. And I still feel that way. It's a ways off. So a little dabbling, but I wouldn't go in heavily.
Okay. Well, for people that had all of their money in the United States and have had the wonderful ride for 5 years, it probably is a good time to be looking overseas to a certain extent because they've got price-to-earnings ratios that are extremely high in the U.S. compared to other countries overseas.
That's true, but our price-to-earnings ratio is about 18 right now. Mm-hmm. And 18 is fair market value. Yeah. It's not unheard of that the price-earnings ratio can go a whole lot higher before the market starts doing some serious pullback.
Good point. All right, well, let's talk about energy. People that are looking for yield, energy has, and I want to remind our viewers and listeners not to make market timing decisions based on what we say here. And we're not accountants, we're not lawyers. We have an accountant we'll talk to later. But let's talk a little bit about energy when it's been beaten up as badly as it has. Is this a time to be looking for yield in the energy sector?
I don't think so.
Okay.
Because the stockpiling of the oil and other energy products is so high right now. And we just came off of a terrible winter. I think that energy prices could go through another decline. Okay.
So let's talk that, let's say as we speak, oil is $49 a barrel or whatever. You think it could go down into the 30s?
I don't see it as being outside the realm of possibility, but I'm not predicting it either.
But if it gets down there, you'll be a buyer.
Definitely.
All right, fair enough. Okay, well, one of our viewers expressed an interest in commodities, so let's try to help him out. This is Dale Marks of Exton. Is this a good time to invest in the commodity markets, and if so, what areas?
I would shy away from commodities that are materials, really.
Okay.
I would, at this point in the market, we've gone into a period of very high volatility, and I think that's going to continue. I would look more favorably, not on the specific commodity, but on what's called non-traditional mutual funds.
Okay.
And specifically, I'd look at long-short funds where the portfolio manager has the ability to go short when the market's not doing well. I'd also look at absolute returned funds. But understand this, Dale, that just because it's called an absolute return doesn't mean that you're destined to make money when the market is up and make money when the market is down. It's not, I will absolutely always make a positive return.
Sure.
Absolute returns, when the market's going up, typically don't go up as much. When the market goes down, they typically don't go down as much. So it's really meant as a conservative hedge to protect a portfolio.
Well, that's a really good point, that even if you're investing very defensively, but you're in the stock market, if the market goes down, you can lose money. Maybe not as much, but some people don't realize that there might be a minus sign in front of that number, and they think by being defensive that they won't lose money. So I'm glad you pointed that out.
Right.
Okay, well, let's put up the information for our viewers and listeners in case they want to send in a question. And here's how to send it in.
You can have your questions answered on Money Matters. Please go to our website, money-matterstv.com. On our homepage, click on the banner on the right that says Send Us Your Questions. While you're on our website, you can find information about our host and guests, as well as show notes and links about this show and past shows. Money Matters is also available as a podcast on iTunes and Stitcher, so you can listen to Money Matters while you're on the go. That website address, again, is money, M-O-N-E-Y, -matters, M-A-T-T-E-R-S, TV.com.
Okay, now we're back with our regular part of the show, and we're going to get to talk to Jim Hanna. Jim, thanks for coming in. How are you doing?
Oh, very well, thank you. Could not be better.
Good, good. Well, I thought we could start. I know there's a lot of discussion about corporate taxes and that sort of thing, because it seems in Washington there's a better chance that they may be restructuring corporate taxes way before they might do the individual taxes. So we thought we'd touch on that a little bit at the start here. So what do you see as the outlook for corporations for local, state, federal taxes going forward?
Charlie, I'm glad you asked about all three. It's a very exciting time with respect to corporate taxes. So much is taking place. Here we have certain companies that have gone through an inversion. They've moved their headquarters abroad. For the United States to stay competitive, we've got to take a close look at our corporate tax rates.
Right.
They're another cost of doing business, and right now it's too costly to do business in the United States with our current cost structure.
Well, you keep hearing that it's 35% rate, and then you hear GE's not paying any taxes or whatever. What's the truth?
Well, it's a great question, Charlie. It's a combination. Many of our large blue chip companies, Fortune 500 companies, have operations abroad, and they have customers abroad. It makes sense for them to serve those customers at a lower cost multiple, arising from a lower tax rate abroad. Now, the money they earn abroad, a lot of times they can delay having that money taxed by keeping it abroad. If they repatriate those earnings, they're going to be hit with a very large tax. Now, one compromise that we've heard about for years would be to let companies bring that money back to the United States at maybe some special rate.
A moratorium or whatever.
Exactly, or a lower rate. Okay. And it's even been proposed by the executive branch of government. The rate isn't quite as low as a lot of people think it should be. It's been proposed. Once the money's back here, we've got to figure out a way to keep it here.
Yeah.
So as far as what you do, what is a small business person, what can they do? They can do several things. We always say you should have a very close relationship with your certified public accountant, with your CPA. Make them your best friend, because the law changes so frequently. You need to get ongoing guidance. For example, the most exciting thing that happened this year was, after years and years of study, the Internal Revenue Service, really in last year, produced guidelines for repairs and maintenance. For years, people have wondered, if they have a large outlay and it appears to be a repair, can they take the entire deduction in that year? So standards have now been set, and the compliance was very cloudy. People thought if you have 10 million in sales and 10 million of assets, you've got to comply. It's complex. The thrust of the endeavor by the federal government is to close the gap between what appears on someone's financial statements and what appears on the tax return. Too many times, decisions were being made for tax reasons, and what they'd like to do is have the book income, the financial statement income, really drive the taxes. So without getting too complex, fortunately there's been a little bit of a reprieve, but here again, you need to really stay close to your CPA, have them look at your own affairs and help you make decisions, because there's a requirement for a corporate resolution, there's a requirement for the compliance as well. So on a federal level, we've got a bit of a mare's nest. We really have to think about how we're going to restrike the balance to make it attractive for the greatest free enterprise the world's ever known to have an attractive tax structure.
Okay.
Well, I'd like to follow up on that, Jim, because many of our viewers are business owners. Mm-hmm. And of course, as an entity, they can come in many forms, a full C, a subchapter S, an LLC. Given that we have the highest corporate tax rate in the entire world, Does it make a difference how you're structured? Are there advantages to one type of structure over another?
That's a terrific question. And there definitely are advantages. As far as entity choice, it's very important at the inception of the business that the business owner get proper guidance from their accountant and from their attorney. As they progress through different stages of evolution and as they grow, they may reach a point where it makes sense for them to have a different type of entity. For a lot of smaller businesses today, people are very concerned about tortious acts. They want legal protection. So we see very few people operating as individual proprietorships.
Right.
And even in traditional partnerships. Those both have unlimited liability. Now we're talking law rather than tax, and I'm not an attorney. So let's switch on over and talk a little bit about the economics of operating a business. We know we can get protection by operating within a corporate shield, whether it's a C Corp where the corporation pays its own taxes, or whether it's an S Corp where the income flows out onto the shoulders of the shareholders and they pay the taxes, or whether it's a pass-through entity like a limited liability company, an LLC. What we need to be aware of, though, is the LLCs have their own sets of complications. You can operate an LLC very inexpensively. If you say, I simply want the LLC formed and you don't want any documents, you have a default to Chapter 16 of Purdon's. Purdon's is the codification of law in the Commonwealth of Pennsylvania. So you don't need articles of incorporation, you don't need a management agreement, but you'll simply follow what the law states. Most LLCs go through the formalities of having their own management agreement, so they know who will manage the business. But apropos simplicity, the LLC offers a lot of simplicity because there's no need for the formalities that are attached to a regular C Corp or an S Corp. There's no need for an annual meeting, there's no need for minutes, so a lot of documentation does not need to be maintained. We recommend, even in an LLC, keep records, because today so often people have to account for their actions.
Sure.
And if you have a minority interest and you've made a decision, 2 years from now, that minority interest might question your decision. So you don't want to keep some sort of record of your decision process, even in an LLC.
Across all three, I'll get questions from clients about how can I protect assets in case of a lawsuit, IRAs, 401ks. You got any general comments about that?
Sure. As far as generally protecting assets, the IRA has been protected with respect to bankruptcy law. As far as protecting it from torts, we should really defer to an attorney.
Yeah.
The law may have changed overnight
Sure.
if there's been new case law. But I'd say as far as general protection, it's a good idea probably to speak to your insurance agent and speak about not only underlying coverage, but also umbrella coverage as well.
Definitely.
So umbrella coverage is not very expensive, and additional increments can be a real bargain as well.
Good advice.
So we'd say speak to all the professionals, the accountant, the attorney, the insurance advisor, and then of course the investment advisor.
Okay. Well, how about the array of corporate taxes today? It seems like there's a million of them out there.
Well, it's a great question. If you're domiciled in the Commonwealth of Pennsylvania, many businesses have decided not to operate as C Corps. They'll operate as S Corps. A C Corp pays a corporate rate of over 9%,
Wow.
whereas an S Corp or an LLC pays at the individual level 3.07. Now, right now, Governor Wolf has introduced a proposal to raise that to 3.7. It's about a 20% increase, almost 20%.
He's got a Republican Senate and House to deal
He
with.
sure does. So we realize, maybe some of his proposals are bargaining chips, but we're all in this together.
Yeah.
We have a deficit. We can't operate a state government with a deficit. It's against the law, and we've got to solve our retirement plan problem with PSERS, with the Public School Employees Retirement System, with the State Employees Retirement System. So we've all got to decide together if Governor Wolf's proposal and it's premature to discuss it, but
Yep.
There's give and take. He's proposing higher sales tax, 6.6%, and different items that will be sales tax that haven't been taxed in the past, and a higher income tax. And the trade-off is lower property taxes at a certain point for certain communities. So what we would say is, again, stay in close touch with your CPA, because they know your business and they know your personal affairs, and they stay well read on federal law, state taxation, state law, and remember the local taxes are the ones that can really sneak up on you.
Yeah.
If someone has some sort of a delivery business, or they have even delivery trucks going into a different jurisdiction, they might find all of a sudden they're subject to some local taxes in that
A
jurisdiction.
business privilege tax, but it doesn't make any difference if you make money or not. You pay tax on revenue in some areas.
That's a great question, Charlie. Most of the business privilege taxes are a tax on gross receipts. So it's a millage tax. It's a small percentage, but it's on gross receipts. So even if you don't make a dime, if you have a year where you have a loss, and you're operating in 15 municipalities, you may find you owe quite a bit of local tax. And the question is, does it cost more to prepare the tax returns than the tax itself?
Yeah.
So
Good point.
Yeah, really.
Good point. Now, we talked about how the United States corporate tax rate is the highest tax rate in the world, and we talked about how corporations who earn profits overseas tend to keep those profits overseas to protect them, and how in the state of Pennsylvania, because we're, looking at raising taxes, many corporations have gone to an S form. Can you give us any other examples of how corporations today are working in this environment of the highest tax and yet trying to remain competitive?
that's a great question. We see in the public arena, the Fortune 500 companies, as we said, they have outsourced a lot of what could have possibly have been done in the United States. They've outsourced it overseas, and there's certain things we can't outsource. We can't outsource wait help at the restaurant.
Right.
The wait help has to be present. But there's many different tasks that can be outsourced. What they've done then is they've gone out and borrowed at very low rates, and they've used those borrowings to continue to pay their dividends to their shareholders. So as we all know, the Fed has worked a miracle in terms of maybe helping our economy turn around, but it's created some absurdities also. Older people that used to like to put money in the bank and get a good return on a CD rate, they don't have that option any longer.
anymore.
And one other aspect, Pat, that no one's talking too much about is the insurance companies. The majority of their investments are fixed income investments.
They are.
They're not equities.
Yeah.
And so at these very, very low rates, of course, the banks are being stress tested. But we haven't heard anything yet about insurance companies being stress tested.
They're
So-
raising premiums instead.
Yeah. Yeah.
So to answer your question, we have to be attuned to federal tax law, state tax law, local tax law, and you say, what can you do to help? There's a lot of planning that can take place. It may make sense for a Pennsylvania domiciled company to open an operation in a contiguous state, depending on where the customer base would be. So there's a great many planning opportunities. What we typically want to do is our most effective planning. It's multi-year planning. We want to look ahead 5-10 years, determine what's the plan for the company, and let's talk about what we can do to save taxes in the process.
Yeah. I've heard a lot of discussion lately about this foreign account tax compliance, FATCA.
FATCA.
What's that all about?
Well, that's a great question. That's become more and more headline news. In the past, certain people who were affluent, sufficiently affluent, would establish a bank account abroad. Now, the United States tax law, for individual purposes, requires you to report income on a worldwide basis. It doesn't matter whether you have an account, bank account in Switzerland or Australia. You're responsible for reporting that income on your tax return. Some institutions I guess, extended a tempting offer to people to forego reporting that information. So the
To break
IRS,
the law.
yes.
Okay.
So IRS and Congress tighten up the law even further with this act FACTA. So today, everybody is required to report. They have foreign bank account reporting rules. The FBAR reporting rules, there's forms that need to be filed. People simply have to report the income they have from the account, and they need to report the balance, where you have accounts in excess of $10,000. So it's part of regular tax reporting now. For certain people who had not reported in the past, the IRS established a grace period. That was several years back. It's expired. For people who ignored the grace period and had to come forward after, or who were discovered, there have been very severe penalties. We were involved with a client who made a voluntary disclosure, a Liechtenstein trust that was set up by, unfortunately, by this person's father years ago, and the penalties were such that the trust corpus was cut in half by the time.
Wow.
So we say to people, report your income properly.
Sure.
There's enough challenges in business today and in everyday life. The last thing you need is a visit from the IRS.
Is there a question on everyone's taxes to ask if they are doing this?
That's correct. It's everyone needs to disclose every year that they properly reported foreign income.
Or don't have any?
That's right.
Okay.
Well, let's turn it a little bit more positive here.
All right.
Yeah, let's.
Real estate is a major area of investment. Can you speak to the new repairs and maintenance rules that have come out?
Sure. The repairs and maintenance rules, in the past, people were concerned about whether they could write off the entire cost of a roof repair, or whether it had to be, or whether it was a repair or an improvement. And the question was, what items need to be capitalized and depreciated over a period of years, and what items can be written off immediately. There was an opportunity, and there still is an opportunity open as we approach March 15th, which is the filing deadline for a lot of corporations that have a year end of December. Elections can be made to change your accounting method on a Form 3115. Now we're getting pretty technical, but again,
30 seconds.
this is something you want to stay close to your accountant on, and it's the type of question you'd want to make sure your accountant specializes in other words, in the real estate. There's so many different specialties today. In an ideal world, if you are searching for an accountant, you should ask them about their specialties.
Okay.
I just want to get 30 seconds from you on capital gains. Do you anticipate capital gains will stay at this high level for the high income earners? And do you think the people at the lower income level can expect increases in capital gains? What's your best guess?
Best guess would be existing rates for high income taxpayers possibly paying even more.
Okay.
Ouch.
Lower income people, rates probably would remain stable.
But people shouldn't sell just where you shouldn't let the taxes wag the tail. If a stock goes way up, take your profit, bite the bullet and pay. Yeah. Jim, you've really got a lot of knowledge. You come in here and we get halfway through what we want to ask and our time runs out. We hope you'll come back again. It's really been enjoyable. Well, next week we're going to have Andrew Benioff of the Lean Rock Group, a commercial real estate outfit. And as commercial real estate goes, to a great extent, so goes the economy. We hope you'll join us next week. As far as we're concerned, your money matters.